Let's see. What's going on, guys? What's going on? Give me 2 seconds here. Get all settled. Just quickly do some stuff on social here. Did a lot of prepping for today. Pretty excited. Let's have a good session today. Okay. Let's see. Let's put this down. What's going on, guys? What's going on, guys? What's up, Jeep Life? What's up, Paul? What's up, Ham? What's up, Clarice? How you guys doing? Happy Sunday, everybody. What's up, Rob? Yeah, those Square 70 calls, those things, oh my goodness. I had those things at 36 cents. I think they closed Friday session at like $3.90, 1,000% winner. That was pretty nuts, yeah. Yeah, that was a pretty crazy call, but there's been a lot of that stuff going on, so I'm going to talk through a lot of it, which is great. Wordhog, what's going on? Butterbuck, making a Moscow Mule, love that. David Weeks, what's going on? Simmer, how are you? Jesse, how are you? Happy Sunday. Yep. Let's have a great session today. What's up, Goal? Awesome. Glad you had a good session with Harmony earlier. That's good, man. You're getting the studying in. You probably have 2 hours of studying in between me and Harmony alone. What's up, Rob? What's going on, guys? Let's give everyone a minute or two to log in. I just launched it up a couple minutes late. Sorry about that, but I was just getting some prep stuff. I was having some trouble with the streaming app. So give me a second here, guys, and we'll jump into some things. Pretty excited for today's session. A lot of content. I took some of what you guys said in the main trading room floor. I saw some similarities between what topics you guys wanted to cover, so I'm pretty excited to walk through. It's going to be a normal session as usual in terms of just highlighting the technicals, where we are in the markets. Excuse me, I'm coming up with a little cold. This weather in New York is going like 80 degrees to like 30, 40 degrees. It's pretty crazy, so I feel like everyone's starting to get a little sick. Anyway, it's going to be a normal session. I'll walk through some of the topics later. But yeah, a lot of tickers to cover, a lot of gap fills going on. A lot of shift in sentiment in the last just 48 hours. It's pretty crazy to watch. It's like almost like, nothing's happened the last 7 months and everyone's all bulled up, which is funny to see. But, you got to follow the price action, have some fun with it. But we'll talk through a lot of that stuff. What's going on, Tom? What's going on, Martin? What's up, Ali in the Bay? Dante, Nandish, thanks for coming on, guys. So yeah, we're going to jump in a little bit. Usually I like to jump in when we hit 100 live viewers. So just give everyone 30 seconds to log in and we'll get started, guys. Appreciate everyone jumping on a Sunday night. I will try not to waste any of your precious time. We'll make this as most efficient as always, as you guys appreciate. Do have some questions ready. Grab a pen and paper. We'll do some Q&A. We'll do longer than 15 minutes. So yeah, keep your Q&A ready. Let me just quickly post on social, guys, and we'll get started here. Okay. Awesome. Okay, so let me just see, what do we got here? What are we working with? 65. We're moving in here. Okay. What's going on, Taylor? What's going on, Kevin? Thanks for joining, guys. No problem. Happy to do it. I prepped about 2.5 hours for this one, so hopefully it's a good session for y'all. I think we'll just get into it. People can do the replay and they could jump on when, that's how it usually works. Sundays are always busy with family and stuff. So I'm not going to race through today's session, but there is some substantial content to cover. First off, for any of the new folks following on social media, Weeble, Stock Twits, Twitter, I just created a Twitter. I don't even know. I might delete it. It's pretty crazy on that app. Anyway, so thanks for joining. If you guys are following for the free session today, hopefully it's really helpful. If you're new to the Spud Zone channel, highly recommend the Discord. Check it on out. We've got thousands of premium folks. We've been around for years. navigating these markets via small caps, large caps, options, equities, a little bit of future trading. You guys can check us all out there within the Spud Zone Discord. Hopefully these sessions are really helpful. I do some Q&A at the end, but do have a pen and paper or a notepad ready during the session because we do cover a lot of levels. And the last couple of weeks, it feels really good to sort of have these sessions on Sunday, and then actually Monday through Friday following, you're seeing the moves actually happen, and you're like, oh my God, we just did this YouTube session, and the price action is now showing exactly what we said to look for. So I'm seeing a ton of DMs coming from members up 2, 3, 4, 5x on their accounts and just really crushing small trades. And it's really great to see you guys putting the time tonight that lasts throughout the week because it's really tough in this market. You're competing against other really good traders. You're competing against computers. You're competing against algorithms. So you have to put in your time and you have to have a gut feel for it and really follow some of the lessons that we go through here. So today's topic for discussion. We're going to go over the market recap, just cover last week's insane move in the markets. I think a lot of that was correlated to algo flows and what happened in the treasuries. I mean, this was pretty crazy. It was almost like treasuries dumped so much in one day. It was pretty record-breaking to see. And then the algo buy buttons were just crushing it in the SPY and QQQs. And then select equity sort of just took off from there with risk on. So I'm going to talk through that market recap last week, particularly Thursday and Friday's net inflows to particular names and sectors and indexes. And then I saw in the chat, I did a poll. I tried to do like a 2 or 3 day poll. Like, what do you guys want to cover today? What's some similarities? And the biggest thing I saw, I think for most of you guys, I know a lot of the students of mine, I don't know about the new followers or members, but was cutting losses and particularly like where, when, and why to cut losses. So I'm going to talk through the when, where, why. That's sort of my like three. What's the best way to my 3 words to describe when to cut a loss, where to cut a loss, and why are we cutting the loss? That's typically how I look at it when I do my own losses. And I think there's going to be a lot of discussion around that one. So I'm going to give some substantial time after the market recap. Then we're going to jump into some technical analysis for about 10, 15 minutes. I'm going to run through about 7, 8 tickers here. Tickers that are hot, tickers that are not hot, tickers that are stagnant. So you can kind of see a little bit of both. And then we're going to jump into some quick earnings, just some viewers. I got my eyes on about 1, 2, 3, 4. I got my eyes on about 5 names this week. There's about probably 40, 50 plus this week. I got my eyes on about 4 or 5. I haven't played earnings since the Square, SQ, tickers SQ, and that worked out really, 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 really well to the upside, as someone just mentioned in the YouTube channel. I think 1,000% plus on those alerts now, those calls. So, congrats to that move. That was the last earnings I've played. I haven't been playing earnings season. I'm really trying to be particular unless I have A++++ conviction. So I'm going to keep an eye on some of those names. And then we're going to jump into the Q&A, about 15, 20 minutes of Q&A. And that's when you guys can write in this YouTube column on the right-hand side here. That's when you guys can do your questions, okay? So it's about 6:11. I'm going to run through this and give as I said, I'm getting a little sick, so give me some time to drink a water after each topic here. But what we'll do is we'll kind of jump right into the market recap. So the market recap in terms of last week was pretty crazy, guys. So just to keep things in perspective, right? I still have my lines from the SPY, and we've been going through this almost every Sunday. Like, where can we go? What can we see? And what kind of moves can we see? And yes, Friday and Thursday was absolutely insane. The last probably 3 or 4 years I've been trading, I don't think I've really seen a one-day move in the SPY QQQ 5-7% to the upside. I mean, it was drastic. I mean, we gapped up almost 3 or 4% at the open and never lost any steam. No one sold. It was almost buyers came in at the open at that buying at that high price. So, that to me showed, I think we're going to see more upside. And then Friday was just like the FOMO follow through. You had options expiring. People wanted to crush positions on Thursday. And then you just saw the algorithms just take it to the next level on Friday. I think some of the indexes were up 1 or 2%. So you saw the follow through. We've been having these discussions on Sunday, and where are we talking about the SPY, right? When SPY was at 370, 375, I said, target 385, 390, 400, 410, so now we blew through like 3 or 4 out of my 6 price targets for this Christmas bear market rally, I'm calling it, and it's not even Christmas time, which is pretty scary because, December is typically a decent month, especially towards once you get through the sort of the end of it. You usually have a nice month, especially in November as well. So we could see this rally continue only because we're looking at the technicals, guys, and I want to look at through the daily chart of the SPY. We sort of broke through this double top here, and I'm going to move the lines up. So this horizontal line, guys, is the daily on the SPY, S&P 500. And once we broke this one top, This is a 2 top. A lot of new folks ask me like what a wick is. You guys see this little line here? Not the candle itself. If you guys look at the actual wick itself, not the candle, above this candle, we have a nice little wick here, and that's what I call wicks. So those are typically where you get a lot of buy zone demand or sell side pressure. And so when I use wicks, that's where I try to time my resistances or supports. And so this to me is a 1 top, right? It got faded down, broke through. And last time we broke through this level here, we actually saw a nice push all the way up to 410. So I personally think there's a very good chance this market retraces this 410 mark. If we get over 400 with ease, we tested that a couple times on Friday, but it was a holiday day, and so I'm thinking, guys, from the markets, from the technical analysis and the price action we've seen, I think over the next 3 to 5 weeks we can maybe retest this 410. Who knows? You might even get there this week. But then we run into some overhead, too much supply. What I mean by that is we saw a big rejection off 410 on a 3-day move down 10% all the way to the 370s again. Then we topped out around 430 on the last bear market rally and then fully rejected to even lower lows. So I think this 410 mark is a really key pivot point. That is also the 200-day moving averages for the big indexes. Now, 200-day moving averages are interesting because if you guys didn't know, that's where big money sort of has their stop losses, take profit area. It's a really, really key pivot point for all big fund managers, index funds, mutual funds, fund traders doing long swings, short swings. And that's typically where you might see a pivot and we might retrace a bit. That's typically we could probably see some profit taking, or that's typically a point where maybe if you get over it a lot, you're going to see a squeeze to 430. So I think 410 is that zone, and I said that was my final price target from the bear market rally down in here. Now, I always preach to students, and I always try to coach, do not get greedy. And I've been saying it. I say it every single day. I try to indent it in anyone's heads because in this market, you saw on a flip of a switch, if you were short on Thursday, you got absolutely decimated and annihilated to every single angle, every single degree, and we face ripped to the moon on Thursday. And just because, things were down on Wednesday thinking, this is going to be an easy short, things are going to crash tomorrow on CPI. No, we did not see. We saw the complete opposite. So that's why I always say this is more of a day trading sort of environment, unless you have strong conviction. Now, we had strong conviction for a bear market rally, and it's blown out my expectations with almost 7% move into the last 2 sessions. As I said, 410s is key mark. If we really get into some positive news catalyst comes out in the markets, still short side sentiment, we could potentially squeeze to that 430. Now, as I said to everyone, in this 410 to 430 zone, this is where I think is a great opportunity to re-enter short/downside put protection, because I think this is a zone where we're going to have a lot of trouble breaking through this upside. I don't think we're going to ever retest those highs, at least not in the next 6 to 18 months, in my opinion. And that's just based off of the price action, right? We've went up, we've went down, new lows. We've went up, we've retraced, down, new lows. We've went up, we broke through even, down, new lows. Now I'm thinking we get to here, and then we overshoot down to 330. That's my guess, 350, 330. So I think this bear market rally can have some legs back to 410. I think 410 is going to be like a pivot point. That's probably where I'll try my first set of puts. And that's just an index put play. I'll probably maybe try, SPY 400 puts or QQQ puts. Now, how I'd potentially play that if we get to the 410, 430 in this little bullish gap in here, this is where I'd probably look to scale in slowly into some puts. Now, how I'd look to play it is maybe a month, 2 month, 3 month out on the puts, maybe a down 5 to 10% move from here. So that would be some sort of like a mid-level move. You get a 3-5% pullback. Those should be deep in the money and having a nice gain on those, buying them in here. Obviously, time decay is your problem. But I think what's really important, guys, is if you're swinging upside calls or swinging downside puts, whatever it may be, give yourself some time for the move to actually happen. I know a lot of people on social media are like, oh my God, 500%, 1,000%, 600%. Oh my God, this is crazy. We're making this. You could get caught up in a lot of that nonsense. A lot of it's very quick, fast-paced lotto, has to work to your thing. The move has to happen fast. There's a lot of things that need to happen for those percentage gains to happen. But if you're actually just take a bigger look sort of on the bigger time frame like this, right, a longer time frame, you could actually draw things a little bit easier. If you call the bear market rally in here, it's a little less stressful to buy some long side calls for the next 2 or 3 months, because then you have a couple days where you get some good rip rallies we don't really need to panic over the 5-minute, 10-minute, 15-minute move. You could actually see the big picture and play to the actual trend itself. Right now, the trend's pretty bullish because we broke through this double top. So, I think playing calls into 410 is nice, but as I said, this market could flip on a switch. We could have a huge red week for various reasons. I don't know. I don't know. You don't know the markets. It's been pretty crazy here in terms of volatility. But this is the SPY. I want to talk through the QQQ real quick. I don't want to hold too big. The QQQ actually underperformed the SPY, but it had a really great week. We broke out off this triple top in here. Same thing. I think QQQ has room to about the 290s, maybe 300 zones, 310 max. You hit the 310 in QQQs, I think it's a nice opportunity to then leverage some short sides for into 2023. I am still bearish from January to April of 2023. That's when I think the earnings projections will come down, and that's when I think we're going to get that capitulation type of panic. I think we still have some room for an upside rally, though. We had the midterms. We have some stuff going on. China seems to be opening up tad. I don't know. They're back and forth. So there's some things going on, but, we could see that. I said that bear rally continue. Now, what's really interesting to me, guys, is the VIX. If you look at the VIX, this VIX has been absolutely decimated. I mean, we're trading under $22 a share here. I have my lines drawn for you guys. I want to show you guys the levels because this is pretty intense. I also just looked up the VIX option flow. There were some major call buyers coming in on Friday afternoon. Big call buyers. Someone bought like a block of 134,000 $80 calls for next March, as well as December. December had some calls as well. Next March was some major volatility, big buyers taking advantage of sort of this VIX crash. Anything under 20 on the VIX, as you can see, has been major buy sides demand. The supply, has sort of not started selling off. So I think in here, right where this move where COVID actually was, it's in the same diagram. If you look back from 2020 COVID, when the VIX went from 18 all the way to $85, which was pretty drastic in a couple of days, a couple of weeks, this is where I think could be some good potential. And how I'd play the VIX, guys, is if you have long shares, you've been buying all these dips lately, great. But maybe you want to give yourself some downside protection or some panic sort of fear. I call it the fear protection. And if we start to sell off another 4 or 5, 10% on the VIX, I think that's a good opportunity where maybe you could step in for a long trade here and buy some March. Next March, I like $30. I like the $40 call spreads next March for the VIX. And then there was a huge buyer at 80. Those are so out of the money where I just think it's I think it's just too crazy to buy an 80. But I do like the 40 because if we break through the 30 here, I think you could get this move to this top here. That would be like right in here. That would be like 40, 45. Now 35 to 50 is sort of the zones where people say capitulation. So we haven't got to that level yet. That's why I still feel the markets haven't capitulated yet. And that's why I feel that we really need to see the VIX in the 30s, 40s, and we need to see the SPY at the 330s for things to really sort of feel scared. And I don't see that yet. So I like the 40 spot for next March. And if we get a big dump in the VIX again over the next week or two, going into end of year, I think that's a really good trade setup for the $40 calls in March. And they're pretty cheap. I wouldn't, I'm not saying I'm going to go heavy size, but I'm going to, maybe put some small size together, maybe average scale in on every big dip. So I could get some size in case things get ugly in 2023. That will be my nice sort of paymaker where I'm making money on the VIX each week. So that's the VIX. Those will be long calls on that. So that's the three sort of SPY, QQQ, VIX for the market recap. In terms of the next steps, I want to talk through cutting losses. Now, this is crucial when, where, and why. And how I'm going to talk through cutting losses is quite simple, actually. So if you get a pen and paper here, because a lot of people have trouble with this concept. And I did too when I first started trading. So I totally understand what you guys have sort of concerns or worries about. I've taken losses. I'm going to kind of talk through the NVIDIA trade. And this is actually goes against me because I actually made no money on the NVIDIA trade. I had NVIDIA all the way up here, as I'm sure many of you guys remember. Where were we? Let's go to the daily chart, 190, right in here. So, just real quick, I'm going to move these lines just so you guys can see. This is the example of sort of a stop loss, okay? So, NVIDIA puts, right? We had 190 is a big, 188 to 190 was a big resistance level, right? And so I had NVIDIA puts before the last, I think, earnings report, which is here when we started where it actually pumped up. And so I actually sold because I had a 20 to 30% stop loss on that. Now, 20 to 30% on options, keep in mind on options, is sort of my bread and butter number. I don't like to go below 30%. And what I mean by that is once you get past 20, 30% on a lost contract or even a stock position, right? Think about how much percentage gains you need to make just to break even again. So the faster you go down on a contract or share or position, right? The faster you're going to need to actually break bigger upside to break even on that contract. So if you go down 50%, you now need 100% move on that share or contract just to break even again. So my thing is I always like to cut losses fast. Why? Because capital to me is the most important trade. And what I mean by that is I can make 100 trades. I understand if you can't day trade full time, it's a little tricky. You have to feel, I have to hold this, I have to hold that, but you actually don't. Next time, just use tiny size so that you can actually sell it and not have to worry about, but I have to hold, I have to do this. No. You don't need to do that. You need to have risk management. And what I mean by that is when you have a stop loss below 20, 30%, it can get ugly really fast. That's when the really good traders take their biggest losses, is when they were emotionally tied to a conviction trade, or they're not sticking by their discipline rules. This is when traders take their biggest losses. And this is really how good traders can get into trouble and really get off a streak or get into a hole. It's losing track of how you got to a great spot in the first place. And 20 to 30% sort of my bread and butter numbers for options. Now for shares, it's a little different. It depends on the size I'm using. If it's a large cap or a small cap, 10% is typically the sort of, I have that name on a leash. I have the shares on a leash. I have the options on a leash. And that's typically my sort of bread and butter number as well, 10%. Because if it breaks a spot on the chart where you have your stop loss, guess what, guys? It's probably going to go lower than that if you're long on a stock or long on an option, right? It may go lower than that. If you're short on a position and we break above that with like good volume, you're probably going to lose more. That was a great example was that Netflix. A lot of people were short Netflix. It broke through a double top and it ripped 15, 20% more on top of that. So you just keep holding and hoping. That's not the best strategy. You need to use technical analysis to then educate your positions on where to take losses. So in terms of when to take losses, when do I take losses? I take losses when it gets to a point on the chart or specific percentage on that position I have is greater than around 20, 30%. That's me, of course. Some people be like, no, I like to have a stop loss at 50%. I like to have it at 5% or 10%. Everyone's different. But for me, I like on options, I like to have it 20, 30% max. Anything below that, it's going to be a tough hole to get back into via time decay and all the theta and all that. There's just a lot going against you, right? I'd rather take my capital back, take a breath, and say, okay, let me find the next play. Let me relax. Let me see what I did wrong. Maybe I was a little early. Maybe I was a little late. Maybe I mistimed it. That all can happen. You could be right. For example, right? You guys all remember the premium members that are in the server. And guys, remember, I called this insane NVIDIA call at 188, 190. And the earnings, if you remember, it dumped to like 168 and recovered to 180 something. And I was mind baffled. The numbers were horrific. They cut guidance twice. I mean, I was going nuts. But guess what? I was emotional about it. I had a 30% stop because I had some great liquidity on it. And I said, enough's enough. I'm going to take a 15 grand, 20 grand loss here. And it is what it is because I had my discipline metrics. Guess what happened? The next day, we sell off 9%, then 2%, then 3%, then 3%, then 2%. Then we go in a huge downward gap with the biggest red volume bar in the last 4 years for NVIDIA. We go down 8%. Now we're down 25% in the week. Those contracts are now over 1,000%. And so I missed it by 12 hours, the NVIDIA short. I know a lot of people had bigger time frames and crushed this NVIDIA short from 188 all the way to 130s in like 5 days. It was probably one of my better short calls of the year between Shopify going from 1,800, I think we called, all the way down to, I don't even know, 500, 600, whatever the hell it was, 800, I think it actually was. Same thing, another similar type of setup. So I missed it by 12 hours, but guess what? I stuck to my thesis. I stuck to my discipline rules because as a trader, what's important to me is that capital. If this stock then rallied higher, I'd now be down 50, 60, 70, 80%, and all of a sudden, bam, there goes 40, 50K on position. So I can't do that because I have to have risk management. And so that's an example of, I called the right thesis. I had the right conviction. I did tons of studying and sort of, I had my thesis. It took me a week to find this thesis and I played on it, but I was just 12 hours too early, guys. And the price action spooked me out on the actual day of earnings, rallying 4% instead of going big red. And the market took, I guess, 12 hours to realize how bad the numbers were. And so I was a day early. So it just shows you that, but I had my 20, 30% stop loss in. But for me, I saved a lot of capital that day. That's how I looked at it. I looked at it as, okay, I saved capital. So that's when. When do I cut it? When that 20, 30% gets hit. Where? Let's go to the where. The where is essential. A lot of people ask me, like, where do you cut it? Like, how do you do it? It's always typically an area on the chart, right? So for me, on that specific NVIDIA play on that day, when we got above this wick of like 176, we hit like 177, 178, and I started cutting it right in that 177s, I think I remember, because we started breaking out above this little gap here. See this gap wick? Once we got above that, I got nervous, and I thought maybe we're going to rip to the 180s again, and I got a little nervous. And so that's sort of where I stopped out, because we didn't go below this gap. I thought we were going to go 160s down. If we went 160s down, I'd just move up my stop loss and I'd be in the green and I'd just ride this thing all the way down. But I didn't, guys. I got here, I stop loss because I stop loss where above this wick. So I used the supports and resistances as areas to where I want to stop out of a position, guys. That's really important. Please write that down. Where I want to stop out is where a name is on the chart, right? So for example, let me give you another really easier setup. Tesla. Everyone knows Tesla, right? We said, what did I say all month? That 208 level was really key for Tesla. And I want to talk through why. You see the 208 in here? 208. Look at this. This is awesome. This is a really good example, actually, guys. This is a really good example. I want to give you guys this example because this one, Tesla's been the number one moneymaker machine for me. Actually, I've made much more money shorting this name and buying puts over the years than actually making long, which is pretty crazy given his name's up, I don't know, 1,500% in the last 2 years, 3 years, right? Because it's about timing and the technical analysis. And this one's pretty easy to trade off the charts. 208, 208, 208, three bottom wick, all the way back to 2021, 208, 208, 210, 208, 208, 208. Now, guess what, guys? Where, right? So stop loss, where are you putting your stop loss? If we raid below that 208, 207, 206, maybe give yourself to 205. Guess what? When we break this right here, this line, where are we going? Algos go, we're going lower. This thing lost support. And guess what happened the other day? We lost the 208. We gapped down below 200, and it went fierceful gap down. We went down 10% in 2 days after we broke the 200. We went all the way to 177, guys. That's almost actually 12%. So that's a pretty drastic move. And where do you have your stop loss? You have your stop loss below these supports, right? So when you ask Spud, where are you putting your stop loss? I'm putting it right at the supports, maybe a little bit lower. Give yourself a chance for maybe the bulls to hold that level and maybe we bounce. Once you break through the level, I said, got to cut it. But guess what? I was more short than long here. So I was actually riding puts down in this area. I actually wasn't buying. But if you're a long, I'm giving the example of, that's where you'd probably want to put this. That's where if I was long, that's where I'd be putting my stop loss. So I'm hoping that's helpful, right? You need to line up the charts. Then you need to think to yourself, okay, where do I want to put my stop loss? And you have to level it out because you need to look at a bigger picture on a time frame as well, right? Even if you're playing 5, 10, 15, 20, 30-minute trades, you need to see where the demand zone is, okay? So that was a good example of where. The last question is when cutting losses is why. Why are we cutting losses? I touched on it earlier, guys. Why do we cut losses? We cut losses because that saves us capital. That gives us another chance to wake up tomorrow and trade with that capital. Capital is the most important thing in trading. It's not about your wins, your losses, your huge wins, your huge losses. It's about preserving capital and having liquidity to make another trade. You can lose 80% of your trades, but guess what? If you win 20% of them and you let your runners run and you stay disciplined, you could actually be a really profitable trader. I know many traders that will lose 8 out of 10 trades, but their 2 winners are 10 times bigger than all their losers combined. And so it can happen like that. But guess what? Their stops are so tight and disciplined and they stay to approach. They stay to a strategy and they take very minimal losses. But when they win, they freaking win. And that's sort of how I teach. That's sort of how I coach. And that's sort of how I trade because keeping those losses tight for me, I'd rather lose 6 trades in a row but barely lose anything to my sort of my obviously my what's relative to me, barely lose anything. But then the next couple winners are like double, triple the size of my losers, and that's where you can become profitable. So capital, to me, preserving that capital, that's why we're cutting those losses, so you can live to trade another day. Okay, so hopefully that's helpful. That's the when, where, and why cutting losses. I sort of put my own spin on that. It took me a while to find 3 sort of categories or words to sort of represent for you guys, because I know you guys had a lot of questions on cutting losses. Please let me know if that was helpful or not after the session, because I tried my best to phrase this and sort of go in depth. Let me know if that was helpful or not. If there's still more, if you guys still want to go more in depth on this, like write some questions in the chat or just in the comment section later in the Q&A when we jump into it. Hopefully that was helpful in like where to cut losses, where to have stop losses, where, why, and when. So those are my 3 where, why, whens. Let's jump into technical analysis, the best part of sort of the video for today. That's where most people want to jump on, which is great. So let's kind of walk through some of the charting stuff, guys. So today we're going to run through 1, 2, 3, 4, 5, 6 technical analysis, and I have some bullish, I have some stagnant, and I have some bearish. I think that's going to be a good example. So let's talk about the crazy move that happened last Friday. Well, I'm going to pull up the weekly chart on NVIDIA. Whoops, wrong ticker. NVDA. Just going to show you guys some technical analysis, some teaching points. So NVIDIA, once we broke this level in here, the 150 wick, we're just been gapping up. I mean, I've never seen NVIDIA move 14% in a single day on 70 million shares. That was pretty wild. A lot of that was probably a little bit of a squeeze, trying to press down to the low hundreds. Now we're sort of in that gap, guys. Where do we top out? 163 wick here has been a resistance, which is probably why it had some trouble getting past it. But as I said, it's up 17, 18% in 2 days. I think NVIDIA, if this continues, guys, and chips continue to outperform, this is where this name probably can retrace to. I like the 177, the 180 levels, like sort of where we run into some major sell sides. See this candle here? Yeah. So if this continues, it's a bit overbought and overextended now. I would not be surprised if we retrace to the 150s this week. But I also wouldn't be surprised if we get to the 170s. So your levels for NVIDIA would be like pushing, gapping up to the 170s. That's probably where I look to try a short back down to the 160s, 150s. And then for a long, maybe you retest this 150 mark in this mini gap. As I said, we're sort of in this no man's land for NVIDIA, though. That's the daily chart. Look at the weekly now. The weekly is like sort of really bullish and engulfing. The 161, we sort of got through that. Where's your next level? Look at this triple top, a 1 top, 2 top. We got a 3 top. Nothing back for 2021, hard there. But we got a triple top here, and that's right where I said last time, about maybe 4 or 5 months ago, where we actually took the recent short. That was around 188, 190. So you've seen NVIDIA get to 188, 190. My head's going to go, oh, let me buy some long-term puts, because that's an area where there's been some major sell-side resistance. So that's a 1 top, 2 top. That would be a 3 top. But that also makes me a little nervous, because typically when you retest something for the 3rd time, you break through and gap through. But in this environment, I don't know if we're going to see NVIDIA break through the 200s again. That would be pretty crazy since it went to 108. That would be a 100% move off its lows. Quite impressive. I'd be very impressed by that move. But 188 to 190 is definitely an area where I'd like to maybe try and scale in some shorts or puts here. That is ticker NVIDIA. Apple. Let's look at Apple. This has been a stagnant one. It looks good. I know everyone, well, stagnant in terms of the last week. It sort of sat out of the big market run. Many people, I'm sure some people will be like, no, what do you mean? It's up like, let's see, 8. Yeah, it's up 9 or 10%, but there were other names like ARC ripping 25%. NVIDIA's up 20%. So like you have other names face ripping. Yeah, I guess, this has been a nice rally, 8%. Yeah, 9%. Yeah, this is up 10%. So I guess I'm wrong there. This is a very nice 2-day rally. Where this name, Apple, I think we can go is this level in here, 155. And that's where we sold off last time. Heavy selling on the 155. Now, keep in mind, this name's almost close to all-time highs. I mean, it's only like, what, down 13, 15% on the year, which is really nothing if you think about it compared to whatever, other names down 60, 70, 80%. So I think if you get into this 155 zone again, maybe even 160, I think that's another, as I said, another area where maybe you want to start to throw in a short or some puts again into March of next year. So, we do have a quadruple top, one top, two top, three top, four top here in the 170s. So if this gets to 175, again, I think that would be some trouble for the stock. But those are your Apple levels. We've seen some really good big buyers in the 130s, and that seems to be the bottom for now. But I do think this name can get all the way down to the 120s. I think it'd be a nice little buy around $100 if it gets down there. That's Apple, ticker Apple. 120 is a nice level for it as well. But yeah, so these mega cap tech names have been having some trouble in this market the last 4 or 5 weeks, and those were the names that really recovered most, a lot of market share, a lot of market cap, a lot of market share the last couple sessions. Tesla, we talked through it a little bit on my lesson, but this is a name that is completely bearish and underperforming currently, and I want to talk through why. Let's look at the weekly chart on Tesla, okay? First, I actually want to show you the daily before I take a bigger. We talked through that 208 level, right? You guys see this line here? Right when we broke below this, there was a gap fill all the way down to the 180 level. We actually are bouncing currently off the 180. But I'm actually kind of nervous that if Tesla does not hold these 180s, 190s, even the 208, if we cannot break 208, I actually think we can overshoot and potentially retest that 135. Now, everyone's probably like, Spud, you're crazy, you're crazy. When this stock was 400, I said we could potentially test this 208, 220 level. And we're here. And we got there much faster than I thought. So I don't think I'm that crazy to say this 135 level could get hit. Now, you need a bear market to continue. You would need more sort of bad news on Tesla press to get there. But there is a down gap to fill because we're still below this level. Until we get above this 230, once you get above 230, you have gaps to fill all the way into the mid to high twos. But if you don't get pushed past this 230, it's been trying to. All we're doing actually is building out lower and lower lows on Tesla. Whereas Apple's sort of sitting nicely in a nice spot where it can retest the highs. Tesla's underperforming where it could actually retest the lows quite quickly on any down day. So Tesla does make me a bit nervous on this price action. There's been a lot of hefty selling on this name. So keep an eye on Tesla. This is a good one to watch for volatility. That 180 line right in here, the 1 wick, 2 wick, 3 wick, 4 wick, that 180 line is pretty much the line in the sand. If we raid through that with some volume, you could get a 2, 3, 4 day sell-off, liquidity crunch down to the 130s. 130s, 140s is probably where, maybe even a 150 tap. 150, if you overshoot past that, it's probably a nice buy for a bottom bounce. Similar to the NVIDIA trade when we overshot below the 120s into the 108s. Great buy because, that's at 160s now. So, this name may not be done selling. I don't know, maybe it just quickly bounces off the 180 level. We rip back to 230s. That would be great. But, keep an eye on Tesla because it still has underperformed. I now want to talk through the two big ones, guys. And these are the two big ones in terms of, these are the two names I want to focus on this week because there's a lot of volatility. Coinbase is the only way potentially you can play this Bitcoin craziness, this crypto FTX craziness, which I'm going to talk through. You could play other names like Amara or Riot or MSTR, MicroStrategy. There's very limited exposure on the crypto public exchanges. So in terms of playing from an equity standpoint, short or long. But Coin has a great 2-day run here. We have up 12% on Friday, which is a great close. Unfortunately, this FTX thing, guys, I've sort of studied some charts in the past. I did not trade in 2008, but if you correlate some of the 2008 moves, it's a lot of 15, 20% gap ups the next day and then just overshooting down. There's a lot of whipsaw. And I think that's the situation we have with the FTX and crypto going on. I think there's going to be actually a lot more blood before this gets better. I'm looking at this space as just fully not investable. I just, from a trade, there's going to be trade opportunities like Coin. If you guys remember the trade here, the short was insane. Coin dropped like 50% in a week and then face ripped like 50% in like 3 days. Like it was like crazy. It went from like 40 to like 75, like something nuts. So like there's a lot of volatility, a lot of money to be made on these names if you time the moves correctly. You line up those stop losses, you get a good entry, either long or short, and you can make some money on these trades. But I would keep an eye on the Bitcoin, which is going to be the next thing I'm going to cover next, because there's opportunities in the equity market to play these names, guys. And these are names right now that sort of have a lot of fear into them and a lot of volume, a lot of volume. You could even short so long shares and stuff and still be fine and make 10-20% a day. These are the moves that are happening and occurring right now in the markets. But the whole FTX thing is sort of given a sort of liquidity crunch and crisis. They're halting withdrawals on a lot of different platforms, and it's just the sentiments there where it's getting a little panicky to me. And when things get panicky, we could tend to overshoot down. But typically, you could find a big market bottom on big panicky names like this. But I think Coin, obviously you can't play off Binance. It's not a public company. Coin and Binance are the two big ones from what I've seen and read from the crypto exchanges. And, I'm not a crypto enthusiast. I don't know much about it, but I do know very much about price action. And price action has been absolutely horrific with these names. So I want to talk through Bitcoin. In the beginning of the year, I made some pretty bold estimates on Bitcoin. I think we were trading right here actually. We were trading at around 50,000 in the beginning of the year in January. And I was calling for 18,000. I was calling for a bigger move, and people were calling me crazy that 50,000, 40,000. I was like, I think it'd be a nice bounce off 18s and 18 to 22, and we got that move rather way quickly than I thought. But I've actually now lowered my levels for Bitcoin. I think you could even retest lower on a real big panic push. And sort of we bounced beautifully off the 16 mark. But if you actually look pretty close, team, to the weekly chart, which I'm going to jump through Bitcoin here. And this, I know people are like, I don't trade crypto, so I don't want to talk about it. But actually, you can use this trading mechanism to time the other names like a Mara, or a Riot, or a Coin and play off sentiment there. There's no question we bounced off this 16, 15K mark because look at this candle. That's the reason, right? We had a lot of buy-side support at 2020 around 15, 16 grand. So it wasn't crazy that we bounced there. Some algos came in and took the buy side. But ultimately where I think this name could go is we could potentially overshoot down to this 8 to 10K range. And that's where I think this name would be pretty attractive for a bounce. I like that 8 to 12K land. It looks like it wants to just go lower in here. As I said, you have liquidity issues right now in that space. You have the ultimate bearish sentiment. So you could overshoot down if liquidity keeps selling off. As I said, though, the algos are trying to hold it right now around 15.7. That seems to be the bottom for now. But we could overshoot to that 8 to 12 range. And that's probably a range 8 to 12 is where I'd like to probably pick some up for maybe a trade back to 16, maybe make 50, 60, 70% on that trade. But, that's where an area I'd probably look to scale into some plays with a tight stop under 8s. And that's Bitcoin. And how I'd play that is I'd maybe try some coin puts or on tops. You want to be buying puts right when things are FOMOing into the upside. That's when the money's made, right? For calls or puts, whatever. You want to try and time tops, but it's hard to time this because the volatility is pretty strong. But the range intraday is pretty incredible. It's pretty spectacular. So you can trade these names from up and down. Same thing with a Mara or a Riot. These are these are all miners, Bitcoin miners. So, and these for sure have underperformed the entire market, and they have much more gap side down to the 3s on Riot. Mara's got all the way down to the 5, I remember, because I called it 5, and then this thing exploded to 18. So Mara's got a lot of range on the daily as well. You get onto those 7, 6, 5 range, Mara's probably a nice scoop up for a potential buy trade again, right? So just keep an eye on those levels. That's Bitcoin stuff. There's still a lot of craziness going on there, over leveraging. So just keep an eye on this. If you see the sell side pressure come in, I'm not going to be afraid to play it. I'm going to put my stop loss and I'm probably going to short it or ride it puts down. And whether I'm bullish or bearish in the space, it doesn't matter, guys. I'm not emotional. It's just a trade for me. It's just a trade. I could be bearish one day, make 20, 30% on a name, and then the next day I'm bullish because the price action is bullish. It doesn't matter to me, guys. It's just a trade for me. I don't get emotion, to a stock. So that's that. I covered the technical analysis. We got about 25 more minutes here, 20 more minutes. I'm going to quickly set up the earnings, then we're going to jump into your Q&As. Earnings set up this week. There's a couple good, interesting ones, guys. AAP, Advanced Auto Parts. Chart looks pretty good. What I'm nervous about is the Carvana. I know it's a totally different sort of market. But for used cars, car parts, car services, exchanges, etc., I think that market's getting hit pretty hard with inflation, with prices going down, I think there was a lot of tops, and I think that maybe in the next coming quarters, a lot of these names may have some trouble. AutoZone. Well, I just think that a lot of these names are pretty overbought on the cyclical perspective. And this name also did not do well in this last earnings report. This is AAP. Keep an eye. This name dropped about almost 10% on its last earnings report, and we're getting close to the level where they were in their last earnings report. So if we could gap up into the 190s before earnings, I think taking a trade a week or two out in the 180 puts or something like that could be a nice pair. So I'm going to be looking at the 180 puts for this name. That's AAP. We'll obviously let you guys know if I do end up taking that trade idea. I'm going to see the price action this week. Another name we have this week is NVIDIA, so do keep an eye on that one. That one is currently in the full-on going to the moon gap phase. As I said, the 170s are a really good spot here, 177, 178, and that's where I'd maybe try to be some bearish for some puts. That's short term. Long term, maybe the 190 spot was where I'd be more conviction to be bearish. But there, as I said, bullish. You could be bullish into these names, into these prints. So you could be buying upside calls and selling before their earnings and making some money, as people have been probably buying these calls the last couple of days to make that earnings pump print. And then you have Palo Alto Networks. I'm very bullish on cybersecurity, but I'm not bullish on the valuations, and I think this valuation is very rich. It's been an unbelievable outperformer, excuse me. This thing bottomed down in 2020 at $43 during COVID, and we're at 81.20, almost 3x since that. I think there's potential room to the downside to the 150 mark here, maybe even sub 140s. I think enterprise spending is going to slow down a tad. But as I said, it's a 50-50 split here. I don't know. I really don't know how the earnings are going to come in here, but just seeing what other enterprise earnings are doing, Twilio, and I know they're all different companies, but a lot of the enterprise spending or mid-market spending for a lot of these tech companies have sort of been taking hits. But as I said, people are prioritizing cybersecurity spend. So, it's a 50-50 coin flip. The chart looks okay. Upside, you see maybe 180, even in the 190 range in here. But I also can see a miss and maybe we go 140. So keep an eye on Palo Alto Networks. That's actually Thursday after hours. So that could be a nice, really small lotto. Maybe you play a strangle on this one. You play like 10% both ways, and that one could print. I might look to maybe do a strangle depending on the implied volatility percentages on these ones. Then we have Alibaba, guys, China stuff, Hong Kong, Hang Seng. Hello. We got Baba coming up on Thursday morning. Interesting chart. Down a zillion. You guys probably know how I feel about Baba. This thing was traded in the U.S. It's probably $300 to $500 a share just based off of current revenues. It's getting decimated. It's decimated. You can't chart it. You can't do anything because it all has to do with what's going on in China, what's going on with the COVID restrictions, what's going on with U.S. tensions. It's just, you can't even chart this thing. It's trading at a 7, 8 PE. I mean, maybe even 6 right now. It's disgusting. It's, doing 20, 30% growth year over year since 2010. I mean, the name's incredibly cheap. But as I said, no one wants to step in, no one wants to buy it because of what's going on. So you could potentially see some movement here on earnings. Those premiums will probably spike too. That's a Thursday morning. You got JD.com on Friday morning. That one maybe I might be looking to potentially go short on, given they have Friday mornings. I'm not a big fan of Friday morning earnings reports. Thursday afternoon, Friday morning are actually, I think the statistics are a lot more like 60-40 red to green in terms of moves. So I actually am more bearish when companies try to report end of week because they typically think that people aren't paying as much attention as a Monday, Tuesday, Wednesday, Thursday. So keep an eye on these names, JD.com. Maybe you try some lotto puts Friday. As I said, it's still a high beta one. Everything's pretty cheap on these names too. So, I don't know how much lower they can. I guess anything could go lower, but keep an eye on that one. The last one, same thing as NVIDIA, on same chart almost, is AMAT. This chart's incredibly crazy. I mean, this thing went to $71, and now we're at 111. We're breaking through this double top. Maybe it gets rejected this week with earnings. There's a gap fill all the way to 120. 120 gives you 1 top, 2 top, 3 top, 4 top. 4 top at 120. That's probably where I'm looking to maybe try some puts, guys. 120 AMAT. They have earnings this week as well. That's typically a high premium name as well. But this thing is sort of in that gap zone, 11% and 5%. So it's up 16% in the last 2 sessions. So keep an eye. This rally could potentially be ending for AMAT if we get to the 117, 118. Still has another 5 or 10% room higher. Maybe you get that move before earnings print. Or maybe after, not sure. But if you got the move after, I think 120 is a nice spot to scale in some puts. Yeah, that's AMAT. So guys, that's all the tickers I'm sort of going to cover for the week. But yeah, I mean, if no one has anything else, I guess we could jump into the Q&A stuff. So if you guys want to jump into that, we could sort of jump into some of the Q&A and get rolling with some of that if you guys have nothing else. But hopefully this session was pretty helpful. I tried to emphasize, I tried to emphasize a lot of things in terms of the cutting losses session. So hopefully that was pretty helpful, guys. But yeah, let's jump into some Q&A if you guys want to start writing on the sidebar. Yeah, so I mean, if you guys want to start writing on the sidebar, we can get some stuff going. And I'd be happy to try and answer as many questions as possible. Let me give a quick drink of water here. But yeah, if you guys want to shoot some questions away that you guys have been saving all week or just from the session alone, I'll try and answer them as best as I possibly can. I'm obviously here to help. If you guys are going to jump off, I highly recommend checking out the Spud Zone Discord premium section. It's in the link in the bio. The tech team has posted the link. So you guys can definitely check out if you're not a premium member there. We have 33,000 members in the Discord. We got 54,000 folks following me on Webull. There's a lot of opportunity out there, guys. Studying and getting prepared for sessions like this can really help you throughout the week. So, and I do a lot of this to obviously help myself, but also help you guys. It's really great helping people and seeing everyone really crush it in times of sort of chaos and turmoil. So, shoot away on those questions and let's get rocking. Taylor Aldrich, any updates or ideas on IBM? Let's look. IBM. Oh, nice chart breaking through the high. Yeah, IBM looks like a nice trade. Yeah, IBM has a great dividend. I alerted it earlier in the year around 117. It was printing a 5-6% dividend, which is unbelievable. This is a cash flow company since the 1980s. They've been around forever. It's a legacy tech name, one of the biggest in the world. IBM's a great company. They have a great dividend. It's great to park some capital. As I said, around the 117, 120 mark was great. But as we see this chart here, yeah, it's breaking through the 140s. That's a 3-test push. IBM's a nice trade, yeah. You could see this higher now, yeah. Look at this. 141 broke. Yeah, this has room to the 148. So keep an eye on IBM. That you might see some algos push this to 150 this week potentially. Yeah, I like this trade. Good call on the IBM. I like that. I'm going to add that to the watch list. Whoever put that in, Aldrich, or I think your name was, if I'm pronouncing that right. This is a nice trade. Broke through a triple top. Let's look at the weekly, monthly. IBM. Yeah, looks pretty nice. 148 is pretty key next. Breaks 148. We're in no man's land, all-time highs. And as I said, sometimes I'm not afraid to buy that all-time high break because you could go 5, 10, 15, 20. Who knows how much higher after that. You're in no man's land. So 148 is a nice spot. You break that and maybe could see some more upside. Great call. Next question. SPY going to hit 407, then trace all the way back down the 52-week lows. Jack Sorensen. Yeah, Jack, I went over the SPY levels in the beginning of the session. Has some gap fills to 400, 408, 410 zones. That's where you're going to probably get some overhead pressure. Maybe a little retrace at the 410 zones. That's also the 200-day moving average on the SPY. 420, 430 would be your areas that I would like to personally get into some shorts, some maybe long put exposure. And that's the 420, 430 zones. 410 is that maybe profit taking, maybe retrace, but we got to get to that 200-day moving average, see what the algos want to do with it, see where sentiment's lined up. I don't know if we reject hard off there or break through, but 410 is that next line in the sand here. And that's sort of that was my final price target on this bearish end of year rally that I called about 3 or 4 weeks ago. So 410's that key sweet spot. So good job there, Jack Sorensen on the levels there. Info, hey Spud, GB, what's going on, man? You bought some bonds. How are those doing? Yeah, I bought the 2-year Treasury bond around 4 point. I forgot the exact spread yield to the penny I got. I think it was between the 4.4s, 4.6s, something between there. So I kind of almost timed the top. I put about 250 grand in, and that was my first sort of block into that. How am I doing on it? It doesn't. I'm holding it for full duration, so I'm going to make my 4.5, 4.6% for 2 years. So that's just a. I didn't want to sit cash. I've been sitting cash for a year and wanted to put some cash to work, some capital to work, and I wasn't yet ready to load the equity market, and I'm still not ready to load the equity market. So I put some money into the 2-year Treasury, and that will just yield me a nice 4.6%. So I'll make between, 10, 12, 13 grand on that, and that's just just having cash sitting there. So it'll be a nice trade for me if bonds continue to fly, if the Treasury bills continue to go higher and higher, as Powell said. Maybe I'll put another block of capital in there because it's just, it's better than having my cash sitting in a bank. So I could get it's very attractive. The last time the 2-year treasury rates have got to these levels, 2-year and 10-year, we're back in 2008, so about 14 years ago. So, if you can make 4 or 5% in over a year or two on just doing nothing without trying, it's a really good return in this crazy market. So I took advantage of the sort of the steep rates a couple weeks back. Thanks. Yep, that's the update on that. So I'm holding the full duration, so I get the full 4 point whatever 6% or whatever the heck it is. Hopefully that's helpful. JC, we've seen Amazon, other big tech crash. Then you have AutoZone holding $2,400, and it's been moving up since April 2020. How do you explain this? I think the thing with AutoZone is there's so many old cars out there, and folks aren't actually buying. Obviously folks are buying new cars, but AutoZone makes a ton of money on fixing old cars, oil changes, all that stuff. And if you have so many old cars out there, there's a lot of opportunity, and that's sort of where maybe they're peaking. So I'm looking at AutoZone. I'm looking at, what was the name, AAP for this week that has earnings. So I'm going to be watching those. AAP comes in sour. AutoZone could be a nice potential play for puts as well. But if it comes in hot, AutoZone could continue gapping up to all-time highs. But those are names you maybe want to look at. Those have been sort of the safer bets. People are sort of safe betting on those because you need a car to get to work. So I think a lot of folks are betting on that. So those charts are pretty overextended, though. I agree with you there. But keep an eye on those. Hopefully that's helpful, JC. I don't know if it's going to fall or rise. You just got to look at the charts and see where things line up. Ronaldo Lopez, how you doing? It seems I get hit by spikes on my stop loss. How do you manage that? Well, I imagine if you're getting hit by spikes on your stop losses, you're probably in the weekly options or the ODTs, which are daily options. I think if you're getting stopped out a lot, guys, on options, and I personally get stopped out a ton on options as well. I think what might help you, and maybe try this out and come on the next session and let me know how it works, is maybe buying options for a week or two longer than maybe you would actually normally do it. So you actually give yourself a little bit more time. You're not going to make that drastic big move in the option contract, but guess what? You may not stop out on the position itself. You may push through and actually make profits given your time duration's a little bit longer. So give that a bid. Maybe trying buying out puts calls a little bit longer in the duration itself. And then come back on the live stream maybe in a couple weeks and let me know how you guys are doing with that. But that would be my initial sort of read through on that. See how that works, especially if you're getting hit on a lot of stop losses on that in terms of managing that risk. But yeah, I would see how that works out. I've tried that. You give yourself some more time to actually make those make that position more profitable. Malga Rosada, Kelly, how are you? Can you please look at DraftKings? DraftKings has been all over the place. I honestly don't even want to look at it because that name has been getting decimated. Let me see. That name is like the wild west right now. Look at this chart. My goodness. Yeah, super bearish, and then now it's like, wow, I can't believe where it is actually. Look at this, pumping back. DraftKings has that gap fill to a double top in the 17s. There you go, 17s with the over push to 18, 19, 20. You want to be scaling out probably 17, 18, 19, 20s. Maybe putting on some shorts in there. Maybe buying in under 11 or under 10. Okay, cool. Hopefully that's helpful from a chart perspective. Jack Sorensen, what do you think about DWAC this week? Trump is talking on Tuesday. Honestly, I don't get involved with the DWAC stuff. The only thing I'm actually a very net short bias with DWAC. I don't have a short position or put position on DWAC. But what I do know is their board has not approved this merger. And therefore, this name is a SPAC. So this name has crazy downside risk. This name on DWAC can go to $10 in a snap. One snap, one PR, and DWAC could go to $10 because it's a SPAC. And then everyone gets their money back who invested in the original SPAC at $10 a share. So all those people who invested in this SPAC are currently almost up 2.5x, and the deal hasn't even gone through. So if this deal does not go through and they decide to not merge this, DWAC and whatever the SPAC merging company is, this name could go to $10. That's the risk on this name. And so that's why I'm not like fully bullish on the DWAC. You want to trade it around the Trump stuff? Have fun, be my guest, go do it. I've done it. I've had some good trades with it. But in the past, of course, that was. But I'm not touching this name now. The board's failed 3 times in a row to push this merger through on this SPAC. And so I think there's a much more downside risk to the DWAC trade than there is upside. Now, given said, there could be FOMO and everyone chases this. This could run the 20s, 30s, 40s, 50s. Who knows? Could go to 100 again. I don't know. I'll play it. I'll continue playing, but I don't want to overnight this name because it's so volatile. This is a day trade either direction for me. And I just think it's not worth playing overnighting on this name because of the volatility. Up 25%, down 25%. And I don't like to risk off that. And there's not conviction for me. It's just sort of a hype trade. That's DWAC. Hopefully that helps. It's a great moneymaker. You can make some great coin trading it because of the range. I just wouldn't fall. For me, I'm not going to fall in love with a name because of what's going around the world. I'm going to fall in love with the price action. And so if the price action's bullish, I love it. If the price action's bearish, I hate it. It's very simple. Don't want to get emotionally tied to any of these names. Hopefully that's helpful. Where's the next question? Who's up next? Sleeping Beauty. Short interest due to FTX. I'm not sure what you're talking about. Shelly Colvin, follow you on the D. We'll post. You grabbed X calls, X strikes. We'll get on immediately into options. Don't see the strike help. Boss like dollars help. Less help. We'll get on immediately into options and don't see the strike you bought possible. But Shelly Colvin, if you could just rephrase your question, I'm not following along. If you can just maybe rephrase your question, I'll get to it below. Beb Alexander out and about. How long does it take to become a day trader or level spud? So I mean, 3 or 4 years ago, I started with like 10, 15 grand. And I actually rode all that up over 16 months into a little over $2.4 million. That was sort of my first sort of challenge, and I took a lot of that capital out. Now I'm barely trading any size again because of how crazy the markets are. So I'm trading with practically no size compared to what I comparably were doing the last couple years, just because I want my capital to be safe. I have other potential investment opportunities as well. But I'm trading, every day, all day, just with much less capital. So I'm trying to, sort of challenge myself now with smaller account sizes, 20, 30, 50, 40K, 20, 30, 40, 50K, see if I could build up again into that level. I've taken big losses along the way. I've taken big gains along the way. It happens. I think the biggest thing for me and, taking that question is how do you get to be a day trader at this sort of level and understanding things? It's all about your discipline, your risk management, and your appetite to succeed, honestly. And if you have all three of those and you can really instill a strategy, you can really instill some discipline in your trades and really keep that capital while barely risking, but turning profitable trades into something great, going on a consistent momentum run. And then that's really important. But the biggest thing I think for all these traders, these new traders I'm seeing, is people getting really emotional. Whether they're chasing, they're not cutting their losses correctly. I call it cut the garbage fast. The garbage is only going to continue smelling. Cut it quick. The faster you can the faster I can get out of a position, the faster I can get capital to get into a next best play. That could be tomorrow. That could be 2 weeks from now. So capital is really key to me. And I think I've had days where I'm like, oh my God, this is terrible. How am I down 120 grand? This is crazy. What the hell did I do wrong? But you get really stressed. I take a deep breath. I take a couple deep breaths. Maybe I take a day or two off. I get focused again. It's terrible, but I know that with my strategy, with my discipline, with this, I know that I can fight my way back into getting out of a hole. And that's the best traders that in the world. They can get out and they can get out of their hole based on basically going back to their old disciplinary strategies. And this market is going to test you. This market is going to swallow you up. It's going to spit you out. It's going to throw you out the window. It's going to roll you around in dirt. This market is going to test you. You could have conviction on one day and all of a sudden the world changes the next day and it completely moves the opposite direction. You don't know. We saw that on Thursday. We saw that on Friday. We saw that 3 months ago when we crashed from 410 to 350. So you don't know, right? And that's why it's going to challenge you. And you could trade this market. You could come out of this market trading. You can be able to trade any market for the next 10, 15, 20 years because the volatility is not like this every year. It's every 10, 15 years on average. So, you can get out of this market alive, break even. That would be a huge win on the year. So keep study during these times, focus during these times, because you can survive these trading markets, guys, these periods of time. You're going to be really good in a normal market when everything gets back to normal. And it may take some time. It may take a couple years to get back to that level, but at least you'll be ready. And there's still a ton of opportunity to make money in this market, down and up. So I know that's a long-winded answer to that question, but I'm passionate about that question. So good question, Alexander. Option trader, premium members, is it a monthly payment? Yes, option trader. We have a full options team in there. You could just see the link in the Discord. It's $20 a month currently. There are some yearly specials and discounts we do as well. It's basically all the trades we're taking live in real time as best as we can do it. And then we do a lot of analyzations like this. We post some charts where things may be headed, some bigger time frame stuff. We like to take a couple weeks out per view as well. So you can check out the Discord. You can obviously cancel whenever you want. We have thousands and thousands of testimonials over the years, so you can go check those out. Chris Cohen, do you think the dollar breaks 105 level? I'm not sure. I'm not following the dollar too much. More so, I follow the rates, so I guess following the same sort of trend. Ian Rain, anything on AMC? Nah, I'll buy AMC again at 250 when I bought it last time, and the thing ran to like $60. But I think those names are in heavy dilution phase, and I'm just not touching the AMC, GameStop stuff. I just think liquidity's sort of drying out slowly with the Fed taking money, and I just think those names are sort of losing businesses as they are. So I'm not jumping in on those meme trades. I do think there would be some potential to make some money off those meme trades when things really bottom out. Sort of like the Carvana bottomed out in the 6-7s here, and now we're in the 11s 2 days later. It's almost a 70% move. So I think if that happens, a big 2-3 day gap down on AMC, maybe you try it for a bounce, but I'm not buying or holding that kind of stuff long term. Allie in the day, DYs, yeah, okay. Jack Sorensen, thanks for the info, Spud. You cool, man. I appreciate that. Awesome. Yeah, if you could share some more links in there, that'd be great, Jack. Thanks so much for all the support. Ian Rain, yep. Shane Miller, if you want to go through how often do you pay attention to currency moves and the bond moves? Well, typically the bonds go down, equity markets go up. Bonds go up, equity markets go down. That's a simple chart / T chart where that's a correlation, right? Bonds go up, equities go down. Bonds go down, bonds had one of their steepest losses in years on Thursday. After the CPI report, a huge move in the bond markets down. And what happened? Equities exploded. So that's sort of what happened. That's a correlation. You ready to play TLT when Powell pivots, Shane Miller? I'm not. I don't play TLT. I just haven't done it. I don't know much about it, but it seems a lot of people talk about that one. Sleeping Beauty. SI is the ticker for Silvergate Capital. I'm not sure. I don't know much about that Sleeping Beauty, so I can't really comment on it. It's something I don't really know. Korishigo. Getting to your question here, should I sell my house and put the money into the market, wait for 5 years to reap my millions? I can never recommend or advise anything. I just post my trade ideas, and I'm a technical guy. I look at the technicals and charts and sort of how I play up things. I'm not a financial advisor by any means. I don't trade for anyone or do anything like that. So I would never make a life decision for anyone else. That's you and obviously your decision. So I obviously can't answer that question. Shelly Colvin, rephrasing, will you try to buy the call for X strike when you post? But I look at option spreads and can't buy a strike that high. The highest call is dollars less than you posted, even if I look instantly. Interesting, Shelly. That seems to me you're looking at sort of contracts that may expire in that day or that week. Those contracts typically in options worlds move very, very quickly. So if they're moving so quickly, sometimes I give range like entries. So like if I'm looking at entry, at $1, maybe it's like 90 cents or 80 cents to $1.20. And I know that's like, whoa, that's like a 40% move there. But that's how fast some of these can move. So you kind of want to give like a range of when I want to get in. And then things move really quickly. So it's hard to sort of time tops, time bottoms, as well as sort of getting out. It's the same sort of thing that's tough. And those are the very short durated options. If you're new to options, I think the longer options, like month out's much slower, less stressful. You can actually take more advantage of a move that's happening in a bigger time frame, multi-day perspective, rather than like one move in like a quick 5 minutes. So that's how I sort of would look at it. Hopefully that helps. Ian Rain, I'm not very good at being emotional with the market. Truly, my issue is picking the right plays and start up capital to use. I need help learning options. Big time been reading, watching vids. Okay. Yeah, we have a great options team. Tons of learning. Harmony's our head of options. He's our head options trader. He runs special sessions on Saturdays, Sundays. It's first come, first serve. And it's a fully personalized, tailored options experience for yourself. And he talks through the theta, the beta, all that stuff, the Greeks, and sort of how to identify maybe a good trade setup. I highly recommend. I sometimes sit on there. There's always some good stuff to learn. A lot of our members have had, we've had hundreds, if not thousands, of testimonials over the past year or two on these school sessions. That's at Harmony Trades within the Spud Zone Discord itself. He's our head of options trader and our coach, so you can see him there. So maybe check out him. You might find some really good help. It's like a personalized thing too. You could ask questions throughout the sessions. It's really awesome. Ian Rain, thanks for answering my question. No problem, guys. Beb Alexander, thanks, Spud. You're the man. No worries. Appreciate it, man. Thanks for coming on. I really do. Thanks for you guys. Dan, how do you find / learn your strategy? Did you have a mentor? Thanks. I really didn't have a mentor. I honestly learned from blowing up a ton of accounts. I blew 5, 10, 15, 20, 30K all the time. My first year I was trading, I would blew so many accounts and I just kept blowing them and blowing them. And finally I just said, I need to like figure this out I was so passionate about it. And I finally just got in a routine, started cutting losses really quickly. Stuff I share with you guys every single day. Not getting greedy. I call it the 10% rule, on shares or contracts. If you start above 10% on like a small cap penny stock or a stock position and you're up 10%, take some off the table. There's nothing wrong with taking profits. You're not going to get screamed at for making money. You can always take profits off the table. Guess what you can't do? What becomes emotional is when you start to get red on the position. At least maybe you took some profits. Now, if it goes down 10% on the red, you're still up a little bit. Maybe you're even, right? So there's potential ways to really grow your accounts. And, I try to teach these strategies because a lot of people just don't have this kind of stuff. I made so many mistakes when I first started trading. I still make a ton of mistakes now. But if I can help new traders avoid some of those mistakes, I feel really great because then, you don't have to blow accounts. You don't have to do this. And I teach through all my big losses that I've had. And every time I have a record loss, I go through it. Every time I have a record gain, I try and go through it. This year, there hasn't been too much of that because I've really sized down on my accounts. But over the last couple of years, you've seen me make some big gains and you've seen me have some incredible losses. And they're not fun on the bad days. It's really fun on the great days. But, you gotta be able to go through all that. X Rose's 100-point drop tomorrow. I don't know. Carice Trigo, thanks for entertaining my question. Oh, thanks. No problem. Taylor Aldrich, HPK earnings this week. I don't know anything about that name, sir. Rob Kinnan, thoughts on apps, Digital Turbine. I don't know that name. Not going to pull up the chart. But maybe try and line some of the supports, resistances, sort of like that. Dan, great question. Yes, Dan, that was a good question. I don't have any, as I said, I'll try and answer the second part of your question. So basically I came into a strategies from trial and error sort of ordeal. I made a ton of money in the small cap space actually. But now I'm finding to see that med caps, large caps are getting really beat up and those are great opportunities to short or long. The liquidities are great. Where small caps now, the liquidities are just not there. There's no free capital anymore. The Fed's taking a lot of that away. You're seeing a lot of big names, sort of, I call them gurus that, pump all these small cap stuff and they're MIA. They've probably, blown up accounts. They're gone. You don't see anyone posting anymore. So all that stuff needs to filter out. All these, a lot of these guys got to go to zero. A lot of this bad money's got to come out first before you kind of hit the reset button. Maybe we'll hit the reset button in small caps to get a supernova here and there, which would be great for the, for the momentum, for the feelings, for the emotions. That'd be great. I'd love to trade it. Until I see those trades come back, I'm not playing them. If you notice, I said 8 months ago, I said I'm going to stop playing small caps. They're dead. And everyone's like, what do you mean they're not? How are they going to be dead? Blah, blah, blah. They've been dead for 8 months. It made me a couple supernovas, the HKD, all those, a couple supernovas. But for the majority, everything's crashed 60, 70% since then. So it's like, you can't swing these things. So it's, it's tough. I'm a day trade small cap guy. So, I haven't really touched much of that. I've moved really into the options because that's where the money is. That's where the volatility is. And I go where the money is. And that's how I play. If I can make a small percentage of whales moving big money around in and out of the market, billions on billions, I'm going to try and make a very, very small subset of that percentage of the volatility. So that's sort of how I look at the things. I'm a really, really, really small fish in a huge ocean, if you look at it in that aspect. Cool. Hopefully that's helpful. Shell, I want to thank you. I saw your alert for ARC lows on Wednesday, made double profit by the next day. No problem, Shell. Yes, that was a great one. ARC blew out my expectations. That 34.35 spot, I've been posting that for a couple weeks on ARC. 34.35 was a key pivot point for a couple weeks. It was all the way down to 212 COVID lows. The Kathy Woods Index Fund, I think the flagship, it was down 76.7% or something on the 2-year, which is the COVID lows, and that was a nice pivot point, and it didn't really have any sell pressure under there with a nice short interest percentage, I think in the 20s. So it was ripe for a move, and bam, and we saw the move Thursday, Friday. I actually missed the whole upside move, but I just couldn't get in time. The market gapped up so fast, and I didn't have any time to really get in on any dips. So ARC had a really great move, but that was an unbelievable move. I'm happy able to take a couple hundred percentage points on that excellent trade. What is your thought on low and HD earnings? Steve asks, I don't know those. I'm trying to stay away from going into particular tickers and taking up people's time, but definitely try and hit up the T's and A's and pull out the technical analysis. Going to answer a couple more questions, guys, as we're on for about a little over a full hour now. As I do say, if you guys are still intrigued and passionate and you love this stuff and you enjoyed this session, the tech team has posted the link in the channel multiple times. You can go try and sign up for our premium service. It's $20 a month. It's live trades all the time. It's learning sessions. It's charting. It's sessions like this. It's Q&A. We also have thousands of really, really freaking talented traders in the group that are typing all day long. So it's just one of those communities that like where everyone's there, everyone's serious about it. There's no nonsense going on. It's business first. We log in 9:30 to 4, and then the thing goes kind of dead. So like you kind of see everyone sort of is very focused. Then everyone we separate work from play. But I highly recommend checking out the server. You'll probably learn a ton, if not anything. We've had a ton of a couple of millionaire students recently as well, so it's very cool. I'll answer a couple more questions. We'll finish this up. Romain Joshua, any long put play ideas? Roman, as I said earlier in the session, Roman, I'm waiting for the markets to maybe overshoot to the upside before I maybe start to scale on some shorts. I've been saying to myself, there's a bear market rally coming. Right now, we're in the midst of an explosion to the upside right now, as you saw with the SPY QQQs lately on the indexes. I want that 410, 430 SPY. If we overshoot in that range, I showed you guys that range earlier, right? For the new people who are getting on right now, I know please watch the video. I went through all this. I know some new people coming on, right? See these zones, right? This zone in here. We get in this zone, 410, 430. This is where I want to be scaling in potentially puts for maybe next March. You buy puts 10, 20% out of the money in this zone, maybe back down into here for next March. And those I think could pay nicely, 50, 100%, maybe even longer if we get a big move dap down. So that's an area, this is an area where I like to re-put on some shorts. You want to be selling into strength, right? So on this bear market rally, if we face rip to 410, as I said, that's a 200-day moving average. That's a big algorithm. That's a big flow. That's a big large whale investor. That's where they want to be scaling profits out. That's maybe people might be reshorting in this area. People might be saying, okay, I'm good with my money now in this rally that I bought in here. I'm going to take my gains and run. So there's a lot of things here at 410. That's a key pivot point. As I said, we are in a bear market. So that means we overshoot down, but we overshoot up. So if we overshoot past 410, these are your levels, 418, 418 and 430. And that's this area, this level. And I've been saying this. If you watch my past videos for the last 2-3 weeks, you're going to see the ranges. These lines have not moved. I've been saying this for 3 months, 4 months, 5 months. I've been saying the same thing as we've been shorting the market down. This is the range where you probably want to start covering in here. And as we see, we broke out of it. So now we're bullish until the 410s. So, so that's how I'm looking at the market. I'm not piling on shorts unless something, there's a big moving PR in the market or there's a big headline that move in the market. Right now, there's nothing in between now and then the next December rate hike, really, and a couple fun earnings coming up this week. But, other than that, I think there's some room for potential upside, and that's why I think you're seeing some of these moves. There's no Fed chalks yet, so, keep an eye on some of that stuff. Hopefully that's helpful, sir. I'll answer a couple more questions. Hopefully that's helpful, Roman. King Tyrant, if I said your name right, if all you had was $1,000, how would you trade in this current market? If all I was using was $1,000, I'd probably be doing like $200 trades, maybe 1 or 2 trades a day. Therefore, I would never have to wait a couple days to trade again. I'd be using probably 10, 20% of my account at $1,000, and I'd be going for 10, 20% base hits. So maybe I'm trying to make 20, 30, 40, 50 bucks on a trade and building up that 1,000 into 2,000, maybe slowly into 3,000, into 4,000. And I'd probably be using like options to do that. Maybe a couple weeks out, maybe try and double the 1,000 and have a tight stop loss, maybe 10, 20%. And that's how I'd be playing with the small account until you get yourself comfortable and maybe you could double, triple, quadruple, X5 that 1,000 into 5,000. And I'd slowly be building off of that. But there's no rush. This game is a marathon. It's not a sprint. You're going to see people, I turned 1,000 into 20,000 in one day. It was crazy. Well, guess what? 1 out of a million are doing that. Everyone else is probably not doing that or losing. I stick to base hits. I call it the 10% rule. You take 10%, you keep compounding that. Every 10 days, you potentially could be up 1x on your account. And then you just keep going and you keep finding a groove. That was my groove. I'm saying it's not going to work for everyone. That's sort of my strategy that worked. So hopefully that's really helpful. I'll answer one or two more questions, guys. Then I'm going. My throat kind of hurts from, I don't know. As I said, the weather in New York's pretty wild. It's like changing degrees all the time. King Trent, gotcha. Hopefully that's helpful, King Trent. Pupathi Arogron, sorry if I pronounced your name incorrectly. How do you watch multiple tickers in the open? I face trouble even though I watch SpyVix and Tesla at open, which to market. So I have, I'm fortunate enough I have 2 huge monitors here in my office. I can cover around 7 to 8 tickers, and that's on the big side of things. And then I have a scanner going. I have CNBC going. I have Twitter going from certain accounts, fast news accounts. So I have a lot going on per se. And what I do is I try to quickly analyze in the first 20, 30 minutes of the market what names are underperforming, what names are overperforming, and I'll evaluate that based on price action. Now, if you're new to me, if you're new to following me, you know I'm a big believer in price action. That's what moves the market. Price action, technical analysis, not emotions, not fundamentals, price action. So you go and you check my past videos, you'll see what I mean on price action. And then I'll say, okay, wait, SPY's up, half a point, but Apple's up 3%. That's overperforming. That's outperforming the market. SPY's green, but Tesla's down 2%. QQQ's green, Tesla's down 2%. That's underperforming the market in the first 30 minutes. Maybe we go lower. So that's how I trade off of. And then after the first 30, 45 minutes, I then start to make educated risk. And then I start having a trade idea. If I enter this at X price, how do I get to this price? Okay, if I enter at this, where do I put my stop at this? And that's how I take my risks. And that's how I start my day. Hopefully that's helpful in terms of how I'm thinking about things. That's a great question, Pupati. King Trent, your Q&A helps a lot, actually. Awesome. Cool, guys. Hopefully this session was helpful. Please subscribe and share with friends and family. I do this for free. I do hours of prep a day, and obviously here to help you guys as well as myself too, in terms of, this helps me prep for the week. But I hope this is like, you get through the trading week and you're like, okay, here were the levels. I know these levels. We studied this for 2 hours. Like, I know I can go long or short here. I know I can take profits here. This is where the big money's made, actually during the studying and prepping. So do share with family and friends. Do give it a like, throw a subscribe. All of it helps, keeps everything going and keeps everyone in good spirits. And hopefully you guys learned a ton. Really love you guys. Thanks for coming on, and these sessions keep growing and growing, and this is awesome. So thanks so much for the time today, guys. Hopefully it was really helpful. Please leave some feedback with me. You could DM me on Discord at Spud, within the Spud Zone Discord, or you could just drop a line in the free chat or their premium sections, and I'll try and get to it, or a mod will help as well. Awesome, guys. Have a wonderful week. Let's trade well, but let's trade smart this week, okay? Let's try to be consistent. Let's take high profitable setups. Let's take A plus conviction, and let's trade well, right? Let's let the price action do the work for us. Let's let our buttons click the buttons, right? So let's trade well, guys. Be good. Enjoy the rest of your week. I'm going to go watch some Yellowstone, the new show tonight coming out. So cheers, guys. Have a good one. See you all tomorrow morning, bright and early. Cheers.